Good morning, good evening, everyone. Welcome to this meeting of the Healthy Planet Action Coalition. We're very pleased to have Sandy Trust join us from the Institute and Faculty of Actuaries in the United Kingdom. So, very warm welcome to Sandy, our special guest, to talk about the topic of insurance and climate change and the series of four very significant reports that Sandy has co-authored on climate scorpion, on planetary solvency, and parasol loss, and those. We really look forward to a discussion around those. So, without more further ado, I will hand over to Sandy and invite you, Sandy, to open up our conversation, and over to you. Thank you.
Great. Thank you. Thank you for having me for that, Ollie. Do you all, will I take a few slides, or do you just want me to pitch a topic? How do you normally do these things?
Well, slides are good, I think, if you've got some that are ready.
Yeah, I have got some slides that are ready. So let me fire those up. And we'll run through some of the key findings from the papers. And then I know you wanted to focus specifically on the insurance sector, so we can kind of dive into that. But let's start with some of the findings from our recent papers, parasol loss. So hopefully you can see that screen.
Yes.
So cut emissions, reach net zero, stop warming at 1.5 degrees. That's the promise that has shaped our global approach to climate change, underpins government policy, underpins corporate decarbonisation. What if it's wrong? What if, and I think the second most important assumption we make as a species today is wrong. What's the first most important assumption? I think it's if you've got nuclear weapons, if I've got nuclear weapons, you use your nuclear weapons. I think the second most important assumption is climate sensitivity. How sensitive is the planet to greenhouse gases? Because what if it's more sensitive to greenhouse gases than we thought? What does that do to our approach to climate change? First off, let's start with risk. Fantastic quote from Luke Kemp. We need to have a best guess about the worst case and make policies on that basis. We're all intuitively fantastic risk managers. We don't, if we go to a North Australian river, we don't jump in because there might be a crocodile. There might not be. We don't know there's a crocodile, but the worst case is we get eaten. We're not doing that with climate change. And that's really interesting because it's inconsistent from the approach which we take to nearly everything else. Defense, aeroplane safety, insurance company failure. We have very low risk appetites. But for climate, we've got ourselves into a bit of a pickle. I'm going to assume this is relatively familiar with risk, the concept of hazard, exposure, vulnerability, response, but I can dig into that in more detail if you want to. And planetary solvency, that was the paper before parasol. We said global risk management is currently failing and blind to systemic risk. This seems like a bold statement. Let's dig into that and illustrate why I think that's true. First of all, why do we need risk in this space at all? Have we got lots of scientists? Well, we've got literally tens of thousands of climate scientists who I should say I have the utmost professional respect for. I love climate scientists. They're my heroes. But this is the IPCC synthesis report for 2023, and that red text, you have to get to page 24 24 before it says climate change is a threat to human well-being and planetary health. Now that is, I think, a very true statement. Having that on page 24 of the report completely diminishes it. It's like the Challenger shuttle disaster or many other classic risk management failures. The risk is not being communicated. And this is why actually working with scientists. There is a scientific process. It doesn't like uncertainty. So there is such thing as scientific reticence. You're not going to publish a paper, so you're quite confident. Plus, lots of misinformation, lots of personal attacks. And IPCC in particular is politicized, and you tend to get the average. And that is what's informing economists, and that's what's informing policy. Risk, on the other hand, what's the worst that could happen? What's the tail? What's our risk appetite? What do we want to avoid? And that is what should be informing climate policy, but isn't. I won't run through all these papers, but the links are in the slides. I'll send the slides to you afterwards. There is a series we started working with scientists back in 2015. Climate change risk assessment would be absolutely impossible today. UK, US, China, and India are actually quite influential on Chinese and Indian policy anecdotally. And the whole framing for all these papers is that climate change is a risk management problem, but we're not applying well-established risk management practices and principles to climate change. So we'll dig into some of the findings. Also some YouTubes, 15-minute YouTubes, which are quite accessible. So this is our summary of Parasol Lost Planetary Solvency Recovery Plan. This is a critical assumption I talked about, climate sensitivity. There is increasing evidence, which I'll touch on later in the presentation, that climate sensitivity, that's how sensitive our planet is to greenhouse gases, is at the high end of the IPCC range. So the IPCC say climate sensitivity is 3 degrees. That technically means if we double greenhouse gases, we get up to 3 degrees. And that's what kind of underpins carbon budgets, and then uncertainties or distribution at that 3 degrees. But we're already at 1.5 degrees, right? The rate of warming has increased, so unless really significant action is taken, we'll be well through the Paris goals, well before 2050, risking planetary insolvency, catastrophic risks to food and water, etc. The top right, this is our hidden sunshade, the parasol, which we've lost aerosol cooling, so pollution acts effectively as a bit of a mirror and bounces sunlight back up and helps with cloud formation. Potentially half degree of cooling impact, potentially more. And our recovery plan, I very firmly believe we have agency. I believe we're playing with one hand tied behind our backs. We need to change our mindset and really move from decarbonisation to active, responsible, intentional stewardship of the Earth system. Working with nature. Nature is our biggest ally, but we've made this about energy. Number 2, stop the stupid stuff of supercharged transition, and the controversial topic of emergency rates, climate stabilisation, whatever you want to call it. It feels to me, sadly, that we are almost inevitably going to need some sort of technological intervention in the climate system if we don't want tipping points. So to touch on this stuff in a little bit more detail, you've got what's known as radiative forcing, left-hand side. So that's the kind of watts per meter squared. You can see carbon dioxide, the biggest factor, methane, second biggest, but sulfate particles, SO2, on the left-hand side, very big negative, very big drag on warming. So going to the right on temperature, carbon dioxide, maybe 1 degree of warming, but a massive error bar. Methane, just over half a degree, but offset by that aerosol cooling, half degree, but perhaps as much as nearly 1 degree of cooling. So it's kind of two large numbers offsetting. If the cooling is bigger, then that means that the warming is bigger too, because we know the actual level of the temperature. Where are we today? I'm sure you're very familiar with it. Just we're about at a lower temperature called the Paris Agreement. Greenhouse gases, and this is CO2 equivalent, not just CO2, have almost doubled, so we're nearly at that climate sensitivity doubling level, and the rate of warming has increased. So those top three numbers are empirical, right? I don't need a climate model. I can just tell you that. So unless the rate of warming decreases, we're going to pile through 2 degrees. And there aren't very many reasons for it to decrease currently. Touching on climate sensitivity, what we expect if we double greenhouse gases is so that will take time for the Earth to kind of get up to temperature. But even if it was 3, we've nearly doubled greenhouse gases, so we're nearly approached 3. But it might be much more than 3. There's an 18% chance ECS is greater than 4.5 degrees. So this is wild. This is well outside climate orthodoxy and absolutely critical. ECS typically has some simplifying assumptions. So Earth system sensitivity is probably higher than ECS. So some scientists think much higher. So long and the short of it, if climate sensitivity is high, we are piling through Paris. This illustration of the IPCC kind of illustrates that. So on the left, probability distribution of ECS, and on the right, different levels of warming for different ECSs, low ECS, high medium, high. And if you look at that high ECS, the darker the colour, the higher the temperature. In a high ECS world, 2 degrees is breached before 2050 in all but a low emission scenario, and we're not a low emission scenario. So the fingerprints of this are in the IPCC reports. But back to that science versus risk observation. Now, paleo data is complex and uncertain, but there are studies suggesting ECS is higher. But for me, this is the killer. Satellite data, this is output of satellite data, so that's that black dot with the error margins, and that's Earth's energy imbalance, so that is empirical again. And the dots are outputs from all 37 climate models used in the IPCC's 6th assessment report. And almost none of the low ECS climate models can replicate what is actually happening. So the suite of models used in the IPCC cannot match what is actually happening. So this is, in actuarial parlance, what we call the experience analysis. What is actually happening and how does it compare to our model output? So this is wild, right? So we might be en route to double the Paris goals of what we say. If there is a silver lining, it's the high ECS, it takes longer to warm. So it's a bit like imagine switching an electric oven on. It takes time to come up to temperature. So we still have time. This isn't, we aren't yet committed to this, although we still have options. This is kind of obvious when you think about it with aerosol cooling. As quoting James Hansen with geoengineering, we've been geoengineering the shit out of the planet already. We just haven't called it that. The language which I think people are starting to move to and coalesce around is climate stabilization rather than geoengineering, but we urgently need to. And with our aerosol cooling, we have been running a massive sulfate and other aerosol cooling experiment. And our net zero carbon budgets are gone. We are in a state of planetary insolvency on the carbon dimension. This is if you were to if carbon budgets were assets, we would be revaluing those assets and writing them down to zero, right? But we're not doing that. We're not treating this with the same rigor as we do financial risks. Now, obviously, this is like the highway to the danger zone. I'm sure you're all pretty familiar with tipping points. And on the left, when do certain tipping points activate? And these are the tipping points that activate in the Paris temperature range. Now, what you'll see here is coral reefs are very sadly already judged to have tipped. The Greenland ice sheet must be quite close anyway. It's not there. Mountain glaciers are in wide retreat. Subpolar giants, a lot of worry about, and the AMOC, really big deal. The Amazon rainforest has a kind of average temperature of 3 degrees, but this excludes nature and deforestation. So once you deforest the Amazon by 20%, that brings the tipping point right down. So we are right on the edge. And if you look at AMOC, you'll see headlines saying the AMOC won't collapse for centuries, and you'll see headlines saying the AMOC might collapse in a decade. So what should we do? Who should we trust? What we do know is that pulse of fresh cold water from the Greenland ice sheet is disrupting the subpolar gyre and the AMOC. That rate of melt is increasing. We're still increasing EEI rate of forcing. So the disruption to the AMOC is continuing to strengthen all the time. And what those headlines mean is two sets of climate scientists defending two different model architectures, neither of which can really be fully parameterized to an AMOC collapse because we haven't got the data. And one architecture has it collapsing and one doesn't. So we're really dicing with redrawing the map of human survival on this stuff. So, and that combination of high sensitivity, inadequate carbon budgets, and what that does to tipping point risk is very, very poorly understood. I think you're talking about 100,000 people, maybe max. We obviously don't want to push the Earth past a point of no return. We obviously don't know exactly when that is, but if we start to trigger tipping points, it becomes very, very difficult to keep, to believe that we could still have agency over our outcomes because you start to release huge amounts of greenhouse gases. But don't worry. I know this has been worrying. Don't worry. The economy will be fine. This, astonishingly, from central banks and regulators, in 2025, a global economic recession caused by climate change is not foreseen, even in the worst case scenario. Thank the Lord. Now, of course, what they should say is in our models. I won't run through all the long list of things which are excluded, some of which are very material. Just to illustrate the lunacy here, I spoke to a very respected economist pre-Christmas. I'd been asked to peer review a paper on climate change adaptation, making the business case for climate change adaptation, and he said it's 9%. The answer's 9%. I said, what? 9% what? 9% GDP loss by 2050? GDP reduction? We get into economic decline? No. He looked at me like I had two heads. No, of course not. No. We're going to have 9% less growth if climate change happens. So we'll have an economy 201% of today's size rather than 210%. I said, oh, right. So, but you've excluded all these risks. No tipping points. No tipping points. No. We've done a very careful study of 300 economic studies of climate change. We've just taken the average, but no, they don't include tipping points. So what's your justification for ongoing economic growth when we're talking about degrading the very conditions that enable human society to exist? And he said, oh, well, the economy's always grown, so we can assume it always will do. So you still have very respectable economic institutions doing work for major global philanthropies and governments saying that that economic growth will continue regardless, which is obviously bananas. And yeah, I've kind of made these points where if the climate's more sensitive, we get more warming than expected. So you'll have seen the hoo-ha about the IPCC removing RCP 8.5, the high emissions scenario. We might not have high emissions, but we could still get that level of warming. And that point, I happen to know, was made by a scientist in the IPCC working group, and he was, just told to shut up, basically. Low temperature scenarios, many of which we're asked to consider, are no longer congruent with physical reality. 1.5 degrees, 2 degrees, and that's theoretical change, of course. So we're looking at hot house damages and really strong parallels with the global financial crisis when models underestimated the level of risk in mortgages and couldn't see systemic risk. So we have exactly that happening. Yeah, we're very honoured to work with Sir David King and again trying to kind of mimic the standards we have in financial services and this idea of a solvency recovery plan. And I've kind of talked through that briefly at the beginning, so I won't go over it in detail. But this mindset shift is really critical. We have to start thinking about the Earth system as a whole. We have to recognize the absolute criticality of these massive natural systems, like the AMOP transfers more than 100 times the energy we use as civilization. Like the scale of the energy and heat transfer is mind-boggling. But really, please stop doing stupid stuff. Methane is relatively easy to reduce and very potent, and we should be able to do that quite quickly. Policy can significantly accelerate the uptake of new technologies. It makes things. You put the incentives in place and people buy it. That's why Norway has nearly 100% penetration of electric vehicles, because they very specifically targeted policy interventions to make electric vehicles cheaper than fossil fuels. And so they've got lots of electric vehicles. Nature, we are not working with strategically with. We're degrading carbon sinks. We're not regenerating nature. Nature is far and away our biggest ally. So by not working strategically with nature, we really have on-hand type under back. Climate stabilization, emergency brakes, geoengineering. I don't say this lightly, but it's very difficult to see how we avoid tipping points without some sort of emergency brakes. Yeah, I guess economic and policy implications. I can touch on insurance here. We are fundamentally entangled with the Earth system. This is a radically new concept for economists, but it is fairly obvious to my 11-year-old daughter and all Indigenous people. Whether you're a central bank, a treasury, an asset manager, a pension scheme, whatever, we are going to be seeing shocks to asset values. I know in Australia, obviously, they've been very grievously impacted by physical risk, and I think there's a real high chance of an inflation shock, actually quite imminently now, with a combination of hormones plus the El Nino and the disruption we might expect from El Nino. But we're not on the front foot. There's no strategic adaptation taking place. There is a lack of certainly governmental coordination around these risks. Financial regulators have to recognize these non-linearities and these deeply flawed models. We cannot continue with outputs that say climate risks cannot ever be financially material when stunningly impactful physical events are happening all over the world. And yeah, policy support can really supercharge the transition. So I've worked through quite a lot quite quickly there, because I know this is an expert audience, and I know many of these topics will have some familiarity with. Just to touch on insurance, clearly the risk distributions are shifting quickly. clearly, we see the emergence of what you might call climate ghettos, areas that are flooded, or where there are wildfires, and insurance rates go up a lot, and people then cannot afford insurance, or they have to, or the state has to step in and create a loss-making insurance company, or provide insurance with less than the value of the house, or insurance companies withdraw. So there is that dialogue of, look, insurance sector, you can see that your business model is failing, but for a rational capitalist insurance company which has a well diversified business, their business model probably isn't failing. They're just sensibly repricing some of the risks that they need to manage in order to remain solvent and service the rest of their customers. So it's a really big topic. It's a really live topic in the UK. Cambridge Institute of Sustainability Leadership have written on it. UXIF, UK Sustainable Investment Forum, have written on it and coined the phrase climate mortgage prisoners. The Association of British Insurers have written to the government and said this is going to impact your home building policy. Civil action groups are kind of putting campaigns together. So it's a really thorny issue and a really difficult issue. And I can kind of certainly see the logic, but insurance companies would say, we want to help, but you also want us not to go bust and to provide competitive rates in certain locations. So we need to work together on this. So I suppose that's my kind of provocation, Rob. We've hugely underestimated climate sensitivity and therefore climate risk. Far too few humans understand the implications of high climate sensitivity and tipping point consequences, and that the insurance sector is probably the canary in the coal mine when it comes to the way some of these risks impact the financial sector. So I can see lots of hands up. Shall I pass over to you to chair?
Thank you very much, Sandy. That was just brilliant from my point of view. Now we have another hour to open up a conversation with all of our participants. So I'll just invite our participants to raise their hand if they wish to speak, and we've got 4 people in the queue at this point. So if you'd like to join the queue and make a comment or question for Sandy, then please do so, and we'll kick off with Dr. Robert Chris. Thank you, Robert.
Well, Sandy, that was very interesting. I think this audience is pretty familiar with the story you've just told, but I must say you told it very well with great slides and I think very comprehensive. So that was quite reassuring
Thank
to
you.
know that we're all singing from the same song sheet here. So I just want to ask you, I'm particularly interested in the insurance approach to the problems that you described. I mean, you had your ostrich with his head in the sand. I'm interested to know whether or not you think the insurance sector is one of the ostriches. And also, I ask this question because insurance historically has primarily been about a risk pooling arrangement. And you might want to talk about parametric insurance in this context, which is a kind of an emerging thing, which is somewhat different. But in a risk pooling insurance sector, obviously not everyone has to get hit by the same peril at the same time, otherwise it doesn't work. And one of the features of climate change is that a lot of people get hit by the same peril simultaneously. And for the insurers to protect themselves in that situation, to protect their profit base, they clearly have to increase the premiums. And we're already seeing that premiums are increasing in some specific sectors to points where the insurance is no longer economic for the insured. So how do you see these things? How do you see the insurance sector adapting as the risk profile becomes more and more severe, and the prospect that the cover that they are providing becomes increasingly less economically affordable for the customer base, and what impact this could have on the fabric of industry and the fabric of the global economy.
Yeah, thank you, Robert. A lot in there. Let me see if I can unpack it. Is there an ostrich approach? I think it varies, to be honest. I think it varies. And if you look at the big, I did a blog on this. I'll put a link in the chat. Last year, I think. And if you look at the big reinsurers and the Swiss Re's and the Munichs and the Zurichs, they're all publishing stuff on the rate of increase of claims, on the rate of increase of climate damages. Interestingly, there's a debate on how much of it's driven by climate and how much of it's just driven by increased coverage. But the claims are increasing at 7% per year. Swiss Re thinks that's doubling every decade, and we would probably expect that would get highly nonlinear. So certainly they don't have their heads in the sand. But if it's a big diversified business, it is very good at managing its own risk exposure and managing rates and sticking rates up where it thinks the risk is elevated. So it's unless it's a very localized insurer with a local business that's hit particularly hard, most insurers are not yet, feeling fiscal solvency distress from this. You've also got a kind of competitive dynamic where if you price the risk more aggressively, if you think the floods are going to be worse, you charge higher premiums, and that means you have to hold more capital, so it can be less profitable, and also you'll probably win less business. So if you price a more aggressive forward-looking risk curve, you'll actually probably lose business and lose profit in the short term. So there's a kind of perverse disincentive to increase your risk pricing ahead of competitors. Plus, it's a one-year business. So I write you a premium, your home gets flooded, I increased your premium by 50% next year. That's if you look at satellite insurance, I'm not super close to it, but I think it's about half the price of the satellite because things go wrong quite a lot. If your home gets flooded, I increase the premium by 50%, and I've covered my risk as an insurer. You obviously now can no longer afford insurance, or it's not economical, or whatever. So there's a big problem because in the society we live in, if you're unable to insure, that has severe implications for your asset value. I think there's another really good point, and this is from Dave Stainforth. If flood probability increase doubles, so it goes up from 0.1 to 0.2%, that doesn't sound much, right? You've gone from 1 in 100 to 2 in 100 or 1 in 50. But if you have 100 communities, the probability that at least one experiences flooding nearly doubles. So if you've got 100 villages, then you expect it goes up from 1 to 2 per year. So, and the chance that 2 or more communities are flooded nearly quadruples, right? So the impact of the risk distribution shifting can really impact the insurance market very, very broadly. What is likely to happen, I think, is hard to say, but currently government's been reluctant to really acknowledge this. So you've seen kind of state level interventions to provide cheap insurance, which is actually loss-making insurance, and commercial insurers pulling that out. So I think it's in Britain, they've created this specific reinsurance structure, Flood Re, which is designed to help insurers provide flood cover in Britain. So yeah, it's like a sort of ticking time bomb, obviously. If a big enough swathe of properties become uninsurable, that's then going to cascade into mortgage books, potentially.
So
Thanks,
just to
Sandy.
follow up, if it's a ticking time bomb, should we assume that the insurers will be smart enough to get well out of the way before it explodes?
It's I'm yeah, I'm probably not. I'm not a GI actuary. So but yeah, I mean, what they're likely to do. So there's another. Just to answer that in a slightly different way. What insurance has historically done is to look at what has happened and price appropriately. So there's been relatively limited forward-looking pricing. So something that could really trigger it would be an abrupt shift to forward-looking climate pricing. If everyone kind of said, this is going up like 20% a year, you get a radically quick shift in premiums. That could really trigger it. Or I mean, this year, it's a big forecast for a very strong El Nino. Last two El Ninos have seen very big flood events in England, and that's the sort of trigger which could see a mass withdrawal from some areas. There are certainly areas in England who've seen their premiums increase, say 100%. They are activating as the public because they're saying this isn't, we can't afford this. So yeah, you can see the risks building. And will insurance companies get out? Probably. Even if there are big losses, they will tend to have reinsurance in place. So they will be insurance companies very good at managing their own balance sheet risk.
Thank you.
Let's move on. Next comment is from Jonathan Cole.
Hi there. I really am impressed with your slide set. I wanted to really congratulate you on capturing so much information.
Thank you.
And would you consider adding a slide that points out that humans as mammals, as simple jungle animals, can't actually create that much CO2. But what we've done is we've built machines and engines. If you take the complete global total of horsepower of in-service motors and divide it by the population, you come out to about 45 horsepower per person. So what happens is if you've ever worked on a farm and there's a tractor, if you've ever experienced how much work a 45 horsepower tractor can do, it's about the work of 200 men with shovels. So what we've done is we've torn up the planet with our engines, with our machines, much more, of course, than we could have, by hand. So as you can see in the background behind me, a slide that simply points out that it's the damage done by our motors, and you can specifically link it to horsepower or watts, that have done the damage. And therefore, all we need to do is redirect a certain percentage of our engines to the activities of cooling the planet. Like you were showing earlier, the idea of doing, solar radiation management, the idea of a 50,000 horsepower heavy lift airplane taking, sulfur powder or something up very high, is redirecting some of that horsepower to the activities of cooling the planet. And therefore, possibly when you insure something that utilizes horsepower, you could put a fee in there that's related to the destructive potential of that horsepower. But a slide would simply make the case for people that they're not actually personally making the planet hotter. It's the machines they're using.
Yeah. No, I'm always happy to create extra slides. And I think there's some really interesting things in what you say there, but part of the narrative which has been very unhelpful and very unsuccessful in my view on climate is the kind of personal responsibility. You need to eat less burgers, get an electric car, etc. And that was, of course, engineered by the fossil fuel industry, copying the plastics playbook. So if we can, narrative is very, very important here, right? We have to be honest with people. They need the cancer diagnosis, but we have to take away their guilt and give them a sense of agency, and give them a sense that agency will be effective. So I think, yeah, removing the guilt from the individual that could be a really nice mechanism for doing that. I like the idea of redirecting, and on climate stabilization, I can't remember the figures I've seen, but it's a relatively small amount of capital if you wanted to build some of those airplanes that you talked about and stick them up into the, to get them started. So I think, as well as redirecting the horsepower, I think we are going to need to get to a place where pension schemes, sovereign wealth funds, governments are also redirecting capital to climate stabilization. And I think we're a few years away from that. But I think if ultimately it's coming down to if you don't want tipping points, you're going to need to do something about it. So yeah, those points really resonate with me. Thank you.
Thanks, Sandy. So I'm next in the queue. So I'd like to reflect on the theory of change that's implicit in the information that you've shared with us. One of the big concerns that I have is that there's a well-funded and influential campaign to continue the darkening of the earth. That is to prevent any action to rebrighten the earth by restoring the 2% of sunlight reflection that we've lost this century. And so my sense, as you intimated, is that solar geoengineering, sunlight reflection, is an urgent necessity in order to stabilize the climate and the economy. But the advocacy for that technological intervention and working out how to govern that intervention in a way that will be socially acceptable just completely lacks resources. And so I'm particularly interested in where can we find the few $1 million that would be needed to mount an effective advocacy campaign. So just to change the tenor of the public debate, like to bring things like the planetary solvency findings into the mass media, where you might be able to tell us what the media coverage of your work has been. My impression is that it's extremely poor. And my sense is that the reason for that is that achieving such coverage requires a concerted public relations campaign, and nobody has stumped up the money to pay for that campaign. And so if we look at the industries who face commercial risk from climate change, you've highlighted the commercial risk for the insurance sector and the flow-on risk to the banking and real estate sector. And then we could mention agriculture, tourism, and a number of other industries who face really big commercial hits if they shift to a realistic economic scenario. And so in terms of fiduciary risk and managing preventing that damage, advocacy for research, for deployment of technology that can stabilize the planet is really an urgent priority. And so achieving that advocacy, and then the next step would be that if there's an advocacy campaign, then there are several governments around the world who are likely to be more sympathetic And I'd mention Iceland having declared AMOC a national security concern, India taking a significant interest in the impact of extreme temperature, and Switzerland having led the campaign to get the United Nations Environment Programme to analyse solar geoengineering. And then if you can get a few governments to take it seriously in a public way, I think that can catalyse broader interest and change in order to make sure that the governance of these new technologies is effective. Thank you.
Yeah, Lauren, thank you very much. So I've put a couple of links into the chat. One is ARIA, which is the UK's Advanced Research Innovation Agency. So they've got a £60 million programme on climate cooling, where they're looking at the governance and some technologies. And then Renaissance Philanthropy, you've got an Arctic Stabilisation Initiative, which again is broadly speaking looking at potential techniques to try and mitigate that cluster of Arctic tipping points, which would be is a very significant one. Yeah, the language which people seem to be suggesting is good to coalesce around for this is climate stabilisation, rather than geoengineering or sunlight reflecting, whatever. That's what the kind of the early research is saying. But absolutely, nobody is pushing that. There is not a well-funded campaign. This is is a significant, consistent, long-term communications effort is needed, both to kind of land the level of risk, the need and the urgency for this, and why it's in people's best interest, and absolutely critical. And that I'm not aware that exists. There is some money going into techniques and tests, and there's one commercial company, Stardust, which has pioneered a new aerosol particle, which has raised money in private markets. But given the level of risk, we're well off where we need to be. There is, of course, very effective, very well-funded, ongoing misinformation and disinformation. Yes, and if yes, I'm not a sort of communications public relations expert, but it's clear that it's real David against Goliath stuff. You've got a very small group of concerned scientists and people on this call and others who get this and are trying to make it happen, and a big group in the middle where there's probably quite a lot of concern and quite a lot of confusion, and some very well-funded, strategic, effective mis and disinformation campaigns. So yeah, I mean, I think I'm kind of agreeing with a lot of what you're saying, Robbie. I'd go back to just that, whether it's increasing the reflectivity, whether it's technological, or whether it's working with nature and reforestation and getting that abiotic pump going. There's a whole toolkit which we've kind of hidden in the back cupboard and we're not using currently. I think we need to get on the front foot with that. The governance point is really interesting. There's a bunch of different climate fictions in which somebody takes a unilateral decision, a government, a billionaire, to do something because the situation gets bad. One of the things I think needs to happen is for governments to actually put climate resilience or national resilience, whatever they call it, as a national security cross-cutting agency that can kind of look across government, join the silos, and take action. There's been some good work in Britain and Australia on the level of risk. Iceland's obviously declared a national able collapse of national security concern. The Council of Nordic countries are on the front foot. But broadly speaking, our risk assessment coordination and our policy response are well off where they need to be at this point in time.
But what's the potential of the insurance industry, and in particular the reinsurance companies, to take a lead on funding such advocacy in the context of the short term drivers for policy
It's, I mean, the potential is high. You have to think the potential is high. These are big, influential players. The American administration has been very, very effective at quashing financial services action on climate through threat of litigation. That's caused a massive pullback from industry association activity. All the big reinsurers pulled out of the Net Zero Insurers Alliance because of that legal threat. It doesn't mean that they've stopped doing stuff, but it's with the current US administration, it's made it almost not more risky, it's really reduced, I think, executive and board appetite for that type of thing. But I would also say, I don't know, but I suspect this thing we've talked about of high sensitivity overshoot and implication for tipping points is not common leader in all insurance companies. I'm not. I think the understanding that we're about to enter a highly non-linear phase of climate risk is not uniform.
Sure, and so when the damage escalates, and there's the potential for that to change quickly, but preparing for that change in advance is an important task. Sandy, I might go on to the other three who have their hands raised.
Yeah.
And noting that we'll continue till the top of the hour, so another 35 minutes or so, and of course welcome anyone else who, including some of our insurance specialists who are on the call, if they wish to make any comment or question. We'll move to Sev Clark. Thank you, Sev. Unmute, please. Unmute, please, Sev.
Okay. Thanks, Robert. Sandy, could you go back to your planetary solvency 5-point recovery plan, please, so we can see it on the screens?
Yes, he said. There you go. There's a bit more detail, or a lot more detail in the paper on each component.
The 5 steps I want.
Is that showing what?
Yes.
No.
Mindset shift. Oh, okay.
Yeah.
No, that's not got the 5 steps.
Oh, okay. Sorry.
You had another one on it.
This one.
Oh well, I guess I can work with that one.
You were being. Oh, sorry.
Leave that. We'll leave it. There was another one better. Oops.
That one.
Oh, the 5-point recovery plan. There we are.
Yeah, that one. Now, my point is that those 5 points, we should continue to work on steps 3 and 4, but we should really jump straight from 2 to 5 if we want to get proper action. We should start immediately to approve, develop, and deploy those emergency brakes. We don't need to wait for the decade or so or two it'll take to get the SIO planes up there, we could use, for instance, my ISA aerostats, which would do the same job, only much more selectively. Comments, I think, yes.
Yeah. So in the working group for the paper, the working group for parental laws, so there's a degree of the actuarial profession didn't feel that it could publish a paper immediately calling for geoengineering. But privately, many of the working group would say it is obvious, as you've just articulated, that we need to get going on emergency brakes ASAP. There is no kind of rational reason, or actually the rational thing to do would be to progress that ASAP, because given temperature, levels of risk, etc., it's incredibly difficult to see how you can avoid tipping points now without some sort of climate stabilization activity. And I think it kind of links to some of Robbie's points on the governance and the narrative and the advocacy. I think people once, and it was quite interesting, the working group for the paper was a mix of actuaries and climate scientists, and I think it's fair to say most, if not all, of the actuaries, if you ask them at the start of the working group, should we be doing geoengineering? I think they said, oh no, I don't think we should be doing that. If you ask them at the end of the working group, I think they would all say it's obvious we have to.
If you could end the screen share, please, Sandy.
Oh yeah, sorry.
And we'll move on to the next. We've got Mike McCracken and Robert Chris. I'll also note that Brian von Hertzen, who's on the call, has made a couple of interesting comments. So I'll invite Brian to speak after Mike.
Thank you. Those were, as everybody's saying, very interesting slides. I guess what I want to get to or ask is why it took so long for the risk management people to get in and really get into this issue. I mean, I think the real failure of the process goes back to the start of the IPCC process, when they basically let the scientists, and I'm a climate change scientist, so I confess to it, when they let them have control of the summary for policymakers and kept the decision framework of scientists as the governing thing. That is, they gave the scientists the right to veto statements that were being made in the summary for policymakers, rather than have it be a risk framing. There's a number of decision frameworks across society. And in this case, fossil fuel companies have their ones about fuel is so valuable and everything. And economists have ones that involve discount rates, and energy technology people have it of give me money, I can make the solutions. And there's energy security ones that you mentioned. That was Dick Cheney sort of saying we're going to have 2,000 more coal-fired power plants. What I guess I'm concerned about is that you're not making a case for your decision framework independent of the scientific community and everybody else, and saying the framework you use is what is used across society in very many places. And so it's a framework that unfortunately hasn't been used over time, but we use it when we, design a bridge for a 100-year flood, or when you basically have banks have reserves for a run on a bank, or when the U.S. makes its Defense Department so big that it can simultaneously fight a conflict in the Atlantic and the Pacific or something. The risk framework is fundamental, and that that should have been part of how the IPCC summary for policymakers was done. I think. Now, I actually don't know what the decision framework is for policymakers, which is what they say they're writing their summary for. But presumably it's pretty much risk based, and certainly the investment community, the long-term investment community doing pensions is and everything. If you look at the Moody's standards for decision for qualifying people and giving ratings or something, they're very risk based and avoiding risk in all senses. And I guess I'm just curious why the actuaries aren't speaking out about it, about that being the traditional way that society has been successful is by looking and using at a risk framework.
Yeah, I mean, I couldn't agree with you more. Yeah, I don't know. I'm not close enough to the origins of the IPCC to know how it was set up. But if you look at the principles and practices, the IPCC has a kind of principles and practices document. The word risk doesn't feature in it at all. So it's a scientific assessment. And as you say, that's not the way we make decisions in almost any other area of society. And there's a bunch of inconsistencies with our. Sorry, go on.
No, I should say we scientists make decisions because we don't want to be wrong. Okay, we're building a pyramid of knowledge and we don't want any cracks. And so we want several standard deviations and we go and address every little crack. If you tried, if a businessman did that when they started a business, we wouldn't have business or something like that. I mean,
Yeah, you'd never get
everybody
it
starts and some number fail. You start because you're taking a risk and jumping out there. And I guess I just think this community, and I have a colleague who's, sort of working on it, and others are to try and get this community to insist and explain the framework that has made society successful. And it's basically taking a risk framework or something like that.
Yeah.
And so don't just say, oh, this is a new way of looking at climate change or something like that. Don't try and partner with the scientific community. The scientific community has its long tradition for a reason. Risk has its long tradition for a reason, and that I think needs to be explained. So I think your number one point about changing the mindset is absolutely critical, and you ought to be much more vocal about it.
Yeah, I think yes. We are the the actual profession. The actuarial profession is many things, but it's one thing it generally isn't. It's outspoken. So we've been, excuse me, we've been trying to, between us, push the profession to get a bit more outspoken on this, with very low rates of success. And some actuaries absolutely believe we should be, and other actuaries absolutely believe we shouldn't. So I guess we're trying to do a couple of things. One, engage with the IPCC, so meeting a UK focal point, that's the title, UK focal point for IPCC later this month to talk about this. I tried to get risk into the IPCC principles and practices, or more have a kind of actuarial overlay or whatever you have. But absolutely, it's a ridiculously bad way to make policy. And even if you look at defense and defense budgets, we don't, there's this somehow in climate change, there is this concept that we should be trying to work out the economic cost of climate change, work out kind of economically optimal temperature and all sorts of crazy crap like that. If you look at defense, we don't try and work out the economic cost of Russia invading Britain. We just allocate some stuff to defense and have some ships and guns and drones and stuff. But yeah, it's a deeply flawed process without that risk overlay, because we're not having the best guess about the worst case. And that's why that climate change and risk assessment report back in 2015 was effective, because it engaged policymakers and military on the risks of climate change, and that drove decisions. So I couldn't agree with you more. If we get planetary solvency kind of spun up and have some cash, then we can do a bit more advocacy and try and do a bit more influencing. But yeah, it's a huge issue.
The scientists in presenting IPCC talk about what is most likely. What the risk community needs to focus on is what is unlikely to happen, but is of a high risk. I mean, that a part of the Antarctic ice sheet may collapse and we may have relatively rapid sea level rise, or about extremes. The IPCC scientific community uses the 10-year average of what the change is over the globe. I mean, talk about something that's irrelevant to impacts and everything, where most impacts are related to short-term extremes. And so I just think that there needs to be much more discussion of decision framework and how as a scientist, the reason we got into that, especially in earth sciences, was to prove that there was a human influence, because a lot of people can't still believe, and accept that putting out a little CO2 is going to melt Antarctica or something like that. But that was a great reason in the detection issue. But for looking at impacts, it's totally irrelevant. Needs to be replaced. I don't see how you can get scientists to do it. It's just their tradition not to do that. They can't get high confidence about what the most extreme events will be. It's not possible.
It's a different mindset. Some scientists are great at risk, but many are not.
I think there is a risk analysis within the IPCC, which says that in order to address climate risk, we simply have to shut down the fossil fuel industry and transform the world economy. But then there's not really an assessment of the risks of that not occurring. So anyway,
go ahead. I was just saying, this is the tipping points thing. They get excluded from models because they're uncertain and difficult to model, and they get excluded by scientists because they're uncertain. But actually, for me, they're the biggest risks. So we need to be absolutely not getting to the point where we trigger tipping points. But that is not what, as you've eloquently articulated, not the information policymakers are getting.
We'll move on. And I'd like to invite
get insurance for uncertainties. That's why you get insurance or something like that, right? So, sorry.
Thanks, Mike. Brian, if you could speak.
Well, thank you, Robert. I think we're dealing with siloed industries in what is a multi-sectorial challenge, and a lot of times that is used as an excuse to delay and prevaricate. I'm disturbed by the figures from the LA wildfires, $350 billion in damages. Normally, there's about 30% of the damages are covered by insurance, but with a systematic disenfranchisement, I would say most of the insurance industry is simply walking away from the business in Florida, in California, and soon to be in other states. So, this is a significant crack in civilization, if you will, with $11 trillion in coastal real estate in the East Coast of the U.S. and the Gulf Coast alone. It represents a breakdown in, insurance, home values, all the rest. To me, it's utterly unconscionable that, it's just a failure to govern. It's a failure to have this cross-sectorial action. And sadly, it looks like most of the insurance industry will simply walk away from the insurance. So thank you for that description of just raising the premiums or walking away. I think there has to be a more proactive role. I'm glad to see the the mitigation deductibility in California, that's a start, but I feel as though it's too little too late in so many ways. And, it's one thing to analyze risk from a scientific perspective. It's another thing to analyze risk from the perspective of putting your children on an airplane with a 5% chance of crashing. And maybe it's 10% by now or more. So I would just ask, nation states are the blood clots of civilization, according to Buckminster Fuller. And I think we've got that same set of blood clots happening between disciplines. So what can we do to oil the circulatory system and design a solution that doesn't simply perpetuate the hegemony?
Yeah, I agree. And I think there's a couple of drivers which we have to try and address. There's the reductionist mindset. So we talked kind of split stuff up and split risks up and split up companies and split up governments and the way they look at stuff. So right through Western civilization is this reductionist mindset, and that's obviously allowed for great scientific advances and stuff, but it's simply not the way the world works. So systems not silos, and it's a constant source of amazement to me that we've had to call, the way the world works, systems thinking, as it's a special thing. When actually it's like that's the way it works, people. So that systems not silos is a huge issue, but that's the way people are trained and incentivized and rewarded and taught to think. So that's massive. That's why a number of people are kind of calling for the idea of whatever it gets called, a national resilience centre or a national climate resilience, whatever it is, which is empowered to look across and think in systems and assess risks, but also present solutions. How it's really tough if you look at successful business people running companies, many may or may not have done an MBA, have an economics background, are often biosphere illiterate and not reading things about tipping points and nature degradation and stuff, are rewarded and incentivized to deliver short-term profits. They're the heroes. So there's a massive mindset shift. We need to kind of remember that we're part of nature, not separate from it, and it's our most fundamental critical infrastructure in every possible way. And that understanding is also absent from many decision makers, I feel. There's one more thing I was going to say, which I've forgotten.
Perhaps it'll come to you.
So it's really it's a mindset shift, right? We need to enable that mindset shift.
Agreed. Yeah, I agree with you completely on that. And you mentioned national efforts to do this, but we're traveling to India at the end of July and for the Keep India Cool Summit, representing marine cloud rebrightening and other efforts to stabilize climate locally and with community leadership. And I think there's a huge disparity, of course, across borders. And, thus our multinational organizations seem to have significant gaps in terms of capacity to actually enable this. Like it or not, climate stabilization is more of a convenience for the global north, but it's an existential threat for the global south. So we're asking the question, to what extent can India help to lead in global south efforts to restore pre-industrial climate conditions? It's an open question. It'll be interesting, August 4th for the summit. Welcome participation by everyone. And, we're living in interesting times. So thanks.
Yeah.
Thank you, Brian. We'll move to Carol Douglas.
Hi there. I wanted to go back to what some comments people made about getting attention and shifting the mindset publicly, and the need for PR and so forth. And some of you know me. In case we haven't met yet, I work on climate restoration, particularly books and communications, and it's a real bear. It was interesting for me to hear that people in SRM are, of course, dealing with the same kind of thing. And yeah, it's a really hard thing to get PR without doing a lot, paying a lot, or to get earned media without already having things going. But I wanted to mention, I've recently dived into Wikipedia, and I would recommend, in case you haven't, I was just taking a quick look at some of the like SRM pages, and I've been updating ocean fertilization and so forth. And these pages are, including those in the field that you're talking about, are mostly very outdated. I don't know if they're super biased, but they're certainly not, they don't reflect current thinking and recent research. And that's a kind of low effort, certainly low cost way to insert your points of view into the conversation, because people really do use Wikipedia. And if they go and they see, oh well, I guess this sounds dangerous and won't work, and don't get both sides or anything new, that can really be to your detriment. If you're interested in if you're new to Wikipedia editing and are interested in learning some of the nuances, feel free to contact me. I have a whole strategy. You have to do it slowly. You have to, it's a tricky sort of thing, but I think it's worth it.
Definitely. Thank you.
Thanks, Carol.
Not a Wikipedia competent individual, but I'm always happy to learn. Thank you. Really...
The climate change, by the way, the climate change pages are incredibly outdated, and they talk almost only about IPCC. So I bet you could insert something on risk there, and also in the SRM, SAI section, geoengineering sections.
Okay, thank you.
I've personally found Wikipedia quite daunting, because there just seem to be pushback against the insertion of information that's deemed to be politically controversial. So thanks very much, Carol. Now,
they have arcane rules, but again, I've been figuring out how to deal with it, so might be able to help. Maybe
holding a Zoom seminar just on the topic of Wikipedia editing for climate policy would be worthwhile.
Okay, thanks. Yeah, I'll think about it.
All right, now we've got two other people with a hand up. Robert Chris spoke earlier, but so I'll just invite Greg Slater to speak, and then we'll go back to Robert.
Thank you. This was a comment mainly on Mike's discussion of the scientific attitude. I personally, I think I see multiple motivations for resistance to seriously discussing any geoengineering methods. I know the word is not used anymore, but I've talked to many scientists, and Mike's a scientist, and they're intelligent people by and large, so they're fully capable of distinguishing the kind of arguments that Mike has raised. So I think they've got other things going on. Among them, there's first of all, the enormous focus on any cooling techniques is on SAI. I think everybody knows in the public, and that's such an easy target to criticize for several reasons. I mean, it's global. It's a global and inherently global technology, and that brings in justice issues, governance issues, whereas everyone who works on local methods realizes that you can bypass those by doing local stuff. But there is this obsession with SAI, and to some extent, I think it's because it's such an easy target to criticize and dismiss. And once you dismiss SAI, you can leave everything out of it. But I do think scientists are fully capable of distinguishing between when you're studying something in an academic sense and when you're advising governments. I mean, we have science advisors in the United States for the precise purpose of laying out options and and even making their giving their view on what should be done. So scientists can do that kind of thing, but I think they have other things going on psychologically that are complicated beyond the reasons that Mike gave. Anyway, that's what I was going to say. Thanks.
Yeah.
Go
on. Yeah, I mean, I guess I've had the fortune of working with a few scientists who kind of get risk, Tim Lenton, Luke Kemp, David King, Dave Stainforth. And yeah, as you say, there's what they will say over a pint is different from what they'll say in a meeting. Is different from what they'll put in a paper. But yeah, there is a scientific process for a reason, and that's great. We ought to keep that, and scientific reticence is part of that. But we have to get the risk overlay going clearly.
Right, and thanks, Greg, and we'll go back to Robert, Chris.
Well,
oh, sorry. Okay.
I just think one last point is that that there is the inertia there. Anywhere in science, if you push, even in purely academic science, if you push there is a bureaucracy and there's a paradigms, and the whole structure of scientific revolution is about how there's enormous resistance to new paradigms. So that takes place. That is a little different than what Mike's talking about, but it is this institutional resistance to, and you can't get funding. You have an idea that goes against the paradigm which developed for whatever reason, and you can't get funding, and you risk your career. So that's going on in the academic community, and it applies to studying or advocating for cooling technologies. Which so that's I think that's a huge factor. Just that's their own risk analysis to themselves, that they're risking their career by pushing the envelope on that. So that's another aspect to it, I think. But anyway, that's all. I won't say anything more.
Yeah, agreed.
Okay, we'll go back to Robert. Chris?
Yeah, I just want to kind of, I'm probably closing this by cutting back to the chase and talking about the insurance sector as a whole. I appreciate that there's a great deal of diversity in the insurance sector, but nevertheless, it is a kind of coherent entity in its own right. And it exists in a global economic system which is well established as a capitalist system where progress is driven by profit seekers. And it's largely in the form of corporations that are owned by shareholders, and management teams come in, and their task, their socially assigned task, is to undertake whatever the business is in order to generate profits for those shareholders. So if you look at the fossil fuel sector, for example, that's what they are. They're companies that are there whose role is to exploit hydrocarbon assets, and they do it very successfully. And the profits get distributed to their shareholders. It is not part of the role of the management of those companies to consider global environmental issues and say, actually, our role in society is to retire our businesses and close them down. That's not why they're there. And I think what I want to do is I want to offer the same picture for the insurance sector and cast it as another one of these for-profit sectors where the management teams are there largely to generate profits for their shareholders. And they are not going to say, look, we appreciate that there are all sorts of systemic issues here for society at large, but that's not our responsibility. We are not being paid to manage that. That is the state or some superstate's responsibility. Our task is to make money from insurance. And as the story that you have very eloquently described unfolds in the coming decades, the logical conclusion from that is that the opportunities for making profits from insurance will increasingly reduce as the global economy gradually collapses. Because if we're getting to average temperatures of 3, 4, 5 degrees, that is not a world in which that anybody around the table right now is going to recognize as being anything like what we have today. So really, I suppose in essence, Sandy, what I want to ask you is, am I mischaracterizing the insurance sector? Are they suddenly going to pop up and say, look, guys, we are actually good actors. We're going to come to the rescue here. There are things that we can do in the insurance sector that are going to save humanity and the ecosystems on which we depend from collapse? Or is it more likely that the normal rules of complex adaptive systems is going to apply, and that there is ultimately no orderly transition at the end? Collapse is not only inevitable, but actually necessary for a regeneration. And the insurance sector will adapt to suffer as little as possible whilst everybody else is suffering around it. I offer you that as a kind of scenario to play with as you will.
Have you read The Deluge? Stephen Barclay's The Deluge. He's pretty good, I think, in how this may play out. I think it kind of maybe goes back to some of the earlier comments that capitalism has become very good over a period of decades of becoming as unbridled as it possibly can be. So takes the profits, puts the externalities on the government, all the responsibility on the government for difficult stuff. Recurrent pattern of short-term profit-making, long-term externalities, which the government may or may not get around to sorting out. And let's be frank, heavy pressure from companies for them to be able to keep making short-term profits, even as externalities mount. So one reason there hasn't been a transition is, however you want to frame it, politicians have been reluctant to, or fossil fuel companies have been successful at not having any political destruction of fossil fuel capital for a forced transition. Like it's clearly possible to limit things and change incentives, and that just, broadly speaking, hasn't happened. Could insurance come together and create solutions and drive into? I mean, I think there are real practical limits on how much financial services follows society, doesn't lead society. I think COP26 in Glasgow was kind of peak financial services will do net zero, and probably took the pressure off policymakers. But financial services don't invent new technologies. Like the risk-taking businesses have to come up with stuff, the scientists have to invent stuff, then it can be insured and capitalized, etc. Financial services are, I think, quite policy reticent, because as long as the economy's growing, they're making money. So they've been much less active than, say, oil and gas or automobiles, and maybe less Machiavellian, but they just haven't needed to use that muscle they've made. They're making more than enough money as long as the economy's growing. I don't think they've got. I don't think they've got the cancer diagnosis, broadly speaking. Like some of them have had at tipping points, many haven't. And I also think what we might think would be reasonable human behavior, the people who become chief executives of insurance companies might not, because you have a certainly more ego-driven behavior. You know what I mean by dark triad personalities, all that kind of stuff. So people who are quite short-term, maybe quite Machiavellian, bit of psychopathy, all the rest of it. So, like, I know people who have looked chief executives of banks in the eye and said, you could just divest, or you could just shut down that line of business. They've said, I'm not going to do that. Okay, so I think it has to come to regulation. I think the government has to say, if you want to sell insurance, that's great, but we have to get on the front foot with this stuff. If you want to deliver pensions in the future, that's great, but you have to allocate 0.5% to climate stabilization or whatever it is. I cannot believe it. I would love not to be saying this. I've been pushing water uphill in financial services for decades, and I have yet to see many concerted leadership initiatives that really move the dial.
But let me just ask you one final question. Which is going to come first? 3 degrees of warming or the change of mindset? The water's going to start running downhill.
If I think things will get catastrophic far sooner than 3 degrees of warming. I think as you head up towards 2, things are going to become extremely challenging for humanity. Civilization on hard mode. Then you're into psychology of what, will there be a flip? Will we flip the switch? Or will financial institutions continue to protect their balance sheets and make profits even as the world burns?
What a lovely remark to finish on.
Yeah.
Well, we'll bring the meeting to an end, and I'd like, on behalf of everyone, to warmly thank Sandy for taking the time to join us and share this really crucial information about insurance and climate change. And we look forward to publishing the video of today's meeting on the Healthy Planet Action Coalition website, and we'll conclude at that point.
Can we get Sandy's slides?
Yes.
All right, Sandy, if you'd like to email me your slides, would you be happy for us to put those on the HPAC website?
Yeah, I think absolutely. There's nothing that's not kind of in the public domain already.
That's right.
It's they're in the public domain. Great. Thanks.
Wonderful. All right. Well, thank you very much, everybody. And bye-bye.
Great.
Thank you.
Thank you. Bye.
Thanks, Phil. Bye-bye.
Thank you.